Well, hey, Southern Oregon, welcome back to the Real Estate Show. We're so happy to have you today. I'm Alice Lima. I'm a broker here in Southern Oregon with John L. Scott Real Estate and your host of the show. And today we're going to welcome back Guy Giles of Mutual Mortgage. He's one of our monthly sponsors, and he comes on the show the first of every month and talks to us about what's going on in the national financial news and also what's going on in the mortgage world here in Southern Oregon. Guy Giles of Mutual Mortgage will be in the studio shortly, and he's bringing along with him Emma Nelson of Oregon Pacific Financial Advisors. Emma has a financial planning background, and she's going to speak to us in detail about how to integrate real estate into your overall financial plan for your wealth building, lifelong wealth building, which is one of my favorite subjects. If you listen to this show with any regularity, you know I'm a big fan of having a plan. So Emma Nelson of Oregon Pacific Financial Advisors will be joining Guy Giles here in the studio shortly. In the meantime, let's check in with our 3 counties market statistics this week. Jackson County prices year over year are up 14%. The average single family home now costing $554,168. The number of sold year over year are down 3% in Jackson County. We only had 49 closing this week on SOMLS in the residential market. Number of listings year over year in Jackson County are up 8%. They had 823 active listings on SOMLS this week in the residential markets. Josephine County prices year over year are up 18%. The average single family residential home in Josephine County now costing $579,798. Number of solds year over year in Josephine County are up 10%. We had 22 closings this week in Josephine County residential markets on SOMLS. Number of listings year over year are up 13% in Josephine County. We had 410 active listings on SOMLS this week. Klamath County prices year over year were up 24%. The average single family home in Klamath County costing $383,410. The number of sold year over year were down 50%, 50 folks. We only had 8 closings this week on SOMLS in Klamath County. Number of listings year over year were up 9%. We had 331 active listings on SOMLS in Klamath County residential market. So you can see our own Southern Oregon markets are mixed, which coincides with the national news. Depending on what you watch, you're getting some volatility and some mixed messages from the national news reports on our housing. In the meantime, let's welcome Guy Giles and Emma Nelson to the studio. Well, good morning, Guy and Emma. Thanks for being on the show.
Hey, thanks for having us in.
Good morning.
So, Emma, this is the first time we've met, and let's talk a little bit about who you are and how you got to be at Oregon Pacific Financial.
Oh, thank you. Yeah, it's nice to meet you. I'm glad to be here today. I have been in the industry about 12 years, and I joined Oregon Pacific Financial Advisors about 5 years ago.
Wow.
Yeah, and before I'd done a lot of, I came from a planning background and found out, there's so much more to investments. When I first got into the industry, I got licensed and immediately started trading in the stock market. And that was my picture of it. I thought, I can do this, but I don't like this piece. I want to just.
So you're a licensed investor,
Yes, yeah,
investment person. Yeah.
yeah. But it's not my favorite part of it. When I discovered financial planning and the software and how we can build out and model what people can do with their lives and show them how it plays out for their finances in the long term, that's when I really fell in love with it.
Wow. Wow. So we'll have to talk more about that modeling.
Yes.
It looks like you started in the industry kind of at Umpqua, and it says Umpqua Investments. I didn't even know Umpqua had an investment arm.
Yeah, they were an old Strand Atkinson office here that merged into Umpqua a long time ago. And I used to work in theater actually. I worked backstage at the Criterion. So
Oh my gosh, did you really?
I did. If you never saw me, I was doing my job. I was just stayed in black and never got on the stage if I could help it. And when I decided to leave there and figure out what else I wanted to do in the world, I went and talked to my financial advisor who ran the 403B, and she said, "Well, you should come work here." So I
Wow.
thought, why not? I'll try that for a while, and that was 12 years ago.
Wow. So what was that like to hear as a theater person? That's quite a reach.
You would think it is, but since my everything I did backstage was really project management. Where are the actors? Are they where they're supposed to be? Are the sets where they're supposed to be? The lights,
Uh-huh.
the sound, are they all working together? And so when I came into this industry, I realized that it was very similar. Where are people's taxes? Where's their real estate? Where's their trust and estate planning? Is it all working in conjunction with their finances?
Uh-huh. Yeah. So what is the most common question people ask you when they first sit down to do this life planning?
That's a tough one because everyone's so unique. They all come
Mm-hmm.
with their different backgrounds. So I work with all ages of clients. You know, the young ones are, I'm saving to buy a house. How do I do that soon? Where do I get to that? I was just talking to someone last night about that. Am I ready? How do I do this? Who should I be talking to? And then some are coming in close to retirement. Do I have enough money? Am I ready to retire? But it really, I think, comes back to people's feeling about money. They're coming in with some type of question, sometimes an insecurity, but sometimes just a question. Am I doing this right? What else
Mm-hmm.
do I not know?
Mm-hmm. So that sounds like it's more generational. Is that what you would say?
Yes, you deal with different things in different time periods of your life. That kind of building of wealth period, and then you transition into how is the wealth you've built gonna last you for the rest of retirement? How can you live off of that?
Mm-hmm. Mm-hmm.
I'd say if I had to say the most common question, people are coming in with, what do I not know?
Ah.
No, I
And
think.
and oh, go ahead.
Oh, I was just going to jump in. I've talked to a few during my career, even if it's for me personally or just dealing with somebody that is, trying to work with somebody to get money together. And the thing I love about Emma is she just is doing the right thing for the client every time. And that's the kind of people that I want to work with. You don't walk out of there feeling, well, they tried to sell you this because they're going to make a one-time profit on it, or they're going to make this margin on it for the rest of their life. She really does do her job to where it's the best for the people. And that's why I wanted to have her on here and introduce her to everybody, because she's just a good, honest person.
Mm-hmm. Well, and it just looks like she has a great background. So let's talk about the younger generation who's saving to buy a house, because that's a topic of conversation that's very common right now. What kind of advice would you give them?
We always start with just a full look at their financial picture. We have a questionnaire that we ask everyone to bring in for their appointment that gathers everything in one place. So they may not think, oh, this life insurance matters to what I'm trying to do, or oh, I forgot that I had this old 401k. When they sit down with our questionnaire, they can list everything in one place. And then I have a picture to say, how much are you paying on your student loan debt? You're trying to qualify for the home here and you have debt to income and you're going to work with your mortgage officer and your real estate agent, but what else do you have at play? And what are your priorities? So we're really talking, what's going on in their kids' lives? How long do they want to stay in this area? So that they have kind of these questions. You know, I'm not giving them any real estate advice, but sending them back with kind of some good thoughts that they can take once they go talk to their real estate agent and their mortgage officer.
Okay. So it sounds like these are older young people if they have children.
I guess it depends. I mean, I had kids in my late 20s, some were having them in the early 20s, so it depends. Just they're on all chapters, some without kids, some with kids, you know, high earners when they're young, some low earners when they're young. I really try to talk to anyone who has questions and get them pointed in the right direction.
Mm-hmm.
You know, if I can also help with their investments and we can do long-term financial planning, then they'll be a long-term client. Sometimes I'll talk with someone and they gotta go away, do that homework, buy their house, start working in their 401k, and then they come back 4 or 5 years later with another question.
Mm-hmm. Well, I love how holistic you are. You know, you look at the whole person and their whole life. That's really awesome.
Yeah, I mean, you have to know about them, and sometimes just having a cookie cutter answer, you know, when they start like, this is what you need to know. And we have, through conversation, there's so much more we need to know.
Mm-hmm. Well, we just have a few seconds left before we go to commercial. Are stocks a good idea, or is that a bigger answer?
That's a much bigger answer. For some people, yes. It just really depends on their situation, and that's what we walk through. And a lot of people don't even have a basis for understanding them. So I always start with that education. Education is so important to me, so they understand what they have.
Okay, well, we're going to go to commercial break here shortly. We're talking to Emma Nelson and Guy Giles. We're thankfully brought to you by Guy Giles of Mutual Mortgage, John L. Scott, Ashland, and Medford, and our local Rogue Valley Association of Realtors. Don't touch that dial. We'll be right back with more Emma and Guy. Well, top of the morning, everybody. Welcome back to the Real Estate Show. I'm Alice Lima. I'm a broker at John L. Scott Real Estate here in beautiful Southern Oregon. And I have the good pleasure of interviewing Emma Nelson from Oregon Pacific Financial and Guy Giles, who brought Emma from Mutual of Mortgage. Thanks for being on the show, you guys.
Hey, glad to be here on this nice smoky weekend.
Well, that is Southern Oregon off and on. So Emma, before the commercial break, we were talking about stocks and are they appropriate for people? And you said it depends. That's a very good answer.
Yeah, you know, it's always interesting to see people come in and see what their background information is. Have they traded in stocks on their phone? Do they just have a 401k that they don't really know what they're doing with it? Do they already have a full portfolio? You know, sometimes they just push a statement across the desk and say, I don't know what I have. And we always start with that is, what do you have? I can't compare it or give you any other recommendations till I have a full picture of who you are, and then also help you understand what you already have. What types of investments, and have they been serving you?
And do they know what they are?
Yeah. And so I'll start with like, how far back do we want to start? Like, what is a stock? What, you know, you have ownership in a company when you own a stock. What are the risks and what are the benefits? We can move bonds. What are the risks? What are the benefits? How do interest rates affect those?
Well, I wouldn't imagine that most younger people have a very good education. Am I wrong or am I right?
No, you're completely right. And even with the internet being available and how much you can go look up information, it's overwhelming. You can Google and ask anything and get a lot of just an overwhelm of information, and some of it contradictory. So having a professional, I'm sure you see this in your industry too, that they may have misconceptions about real estate and what they can do. So really talking to a professional about whatever you need in person makes such a difference. So I'd say yes, most young people don't know, and you'd be surprised at how many 40, 50-year-olds don't know either. They knew they were supposed to save and they put money into a retirement account. Hopefully someone set it up for them well with their employer, and then they may not have touched it for 20 years.
Yeah, or it was put into a low performing something. Yeah, so there's a little heartache.
Oh, those are the worst ones when I see like, I didn't know, so I just threw it in something and like it did not perform well. You could have had twice as much in here, and that's always really hard.
Yeah, yeah, especially for older people who really need it. So going back to the younger generation, um, how do they get the money out of their life every month into an account to save up for a down payment? Because even the small 3%, 5% down payment is really a struggle for people.
Yeah, and it really comes to prioritizing it. And people will come in little cautious and embarrassed sometimes about, oh, I think my finances are a mess. Everyone struggles with it. Prioritizing your money. People who have more money have more problems, really. It's just that priority. So if they can learn good habits, no matter how much you make, you can have
Uh-huh.
habits
Uh-huh. Okay.
when that's a priority in their life. And I can always refer over people to help with budgeting and things like that if they need it. But when it's a priority and they recognize how their money can grow to be able to achieve buying a house or eventually retiring, I think just having that conversation can give them hope and reprioritize it in their mind and say, yeah, I can set this money aside and I'll get there eventually.
Well, it seems that you're quite the educator.
Yes, I guess so. Yeah. I think you have to understand, you have to start with that basis first.
And wherever their education is lacking, you bring them up to speed.
Hmm.
Yeah. So, I don't imagine that the interest rates, well, maybe I'm wrong. Did the interest rates affect your financial, business?
They absolutely do because they affect the stock market. They're going to affect everything we're investing in and
Gotcha.
how much the companies in the stock market can borrow money for, and it's affecting their balance sheet. So all of that then affects their stock price. It also affects, of course, the bond market and how much people can invest in bonds and CDs and their return on that. And then we work with a lot of alternative investments too. We can invest in real estate funds. So some of our clients that aren't going to own actual real
Oh,
estate,
interesting.
yeah, used to own real estate, but maybe as they've gotten older, don't want to have that residential or commercial rental anymore. We can transition that into real estate within a portfolio, and so that's affected by interest rates.
And is that done through their retirement?
Not always. They can be in after-tax accounts, like separate from their retirement accounts.
Wow, wow, that's interesting. We're going to talk more about that later.
Yeah.
So Guy, we want to have you jump in here because this was a big week. You called it Fed Week. So why don't you bring us up to speed? We've got 5 minutes left.
Right on. Well, really, what we're seeing is what we've been anticipating for a little while. A little bit weaker jobs numbers. The one that just keeps throwing us for a loop is the BLS report because you have ADP. ADP is what a lot of people do their bookkeeping, do their all of their payroll off of, and the numbers between the ADP and the BLS seem to be so different every month when they come out. And then the BLS ends up revising numbers. So they get their headline numbers saying that the jobs numbers are really good. They're actually a little bit weaker than what they've been kind of professing for a little while. And that's finally trickling its way down to where I guess the Fed is coming up with a little bit of a plan now to start lowering rates. And what the fine line that they've been walking was not lowering them too soon. We all know that they waited a little bit too long to start raising them up. They admitted that months after that whole thing was over. And we're just really hoping they avoid waiting too long to lower them down. I always put the caveat in there that our rates are traded on the mortgage-backed securities. Some people look at the 10-year treasury, they look at things, but they're overall trends. And 9 times out of 10, we will track right with the 10-year treasury. Right now, there's probably about a 2.6%, actually just a few weeks ago, there was like a 2.6% difference in that rate. I mean, just meaning if they're equal and working together, that spread has been a little bit bigger than
Yeah,
it was
2.6
previously.
sounds kind of big.
What's that? Well, yeah, I mean, really at the end of the day, what we need to do is just have the everything just kind of cooling off a little bit and have the Fed recognize that. And I think September, we're looking at least a quarter cut in rate, maybe a 0.5%. It's going to kind of depend on some jobs numbers that are going to be coming out really, really soon. But they're going to be meeting on September 17th and 18th, and I think we can really expect their first cut to be then. You know, now we have our 10-year treasury that was up over 4.5% is now like 3.9. And again, because these kind of do move hand in hand, we really should see rates starting to come down. We just have actually a really good sustained trend over the last, couple of weeks. And we're looking forward to that. So all of our home buyers should be, if you're refinancing, don't jump the gun. I got a couple of phone calls this week and people are ready to refinance, and there would probably be enough benefit in doing that. But if they wait a little bit longer, they're going to get a way bigger bang for their buck. So that's what I'm encouraging people to do, is just hang on a little longer. We're getting finally what we've been anticipating for a very long time.
Well, and that hanging on advice is prudent because we don't know if the Fed's going to go through with it.
Yeah, I mean, I think unfortunately there'll be some politics involved in it at this point. So they're going to have to do something, and everybody will be feeling warm and fluffy right before an election. If September is when they actually do this. I do really believe that's going to happen. And again, when the Fed cuts rates, that's going to affect your credit cards, it's going to affect your car loans, your home equity lines of credit, but it does not directly affect our stuff. Generally, by the time the Fed cuts rates in September, any lower rates we have will be baked in before that happens. So we're already starting to see that on our end now.
Well, that's interesting. If we go back through time, can you remember if the Fed did interest rate cuts before other elections? I can't quite
Well,
remember that.
I didn't feel like, I mean, obviously there's going to be politics, there always has been. I think that if they were going to do something, they probably should have done it a little while back. People have been hurting a little bit too long.
Yeah, I
Last time it was
agree.
a big crash in '06, that rates really got cut. And so, I mean, usually it's an event that causes it. This one has had a little bit more time to just kind of slowly cook its way through, and we're just really hoping for some, good BLS numbers. And if that happens, I think that well, either way, I think our rates are trending down. So
So
it's
for
good.
those who don't know, in our listening audience, what does BLS mean?
It's a Bureau of Labor Statistics,
I
and
got it. Okay.
yeah. So anyway, like I said, it should be a little bit more hand in hand with the ADP numbers, and it just hasn't been lately. I mean, it is, but they don't revise them until a couple months later. So when the dust all settles, I think that this is a good time to buy. Like, anyway, we can talk a bit more after the break. I know we got to get.
Okay. We're going to be right back with a quick word from our sponsors. Don't go away. Well, welcome back to the Real Estate Show, folks. We're interviewing Guy Giles from Mutual Mortgage and Emma Nelson from Oregon Pacific Financial Advisors. Thanks for being on the show, you guys.
Thank you. Well, I will try to change this into more of just a concise, coherent thought. My problem is there's so many things that are affecting
Oh,
where
yeah.
the home loan
It's
rates are.
it's such a
And
strange world out there.
yeah, and in mid-sentence, I'll think about something else. I really thought a few weeks ago when Canada and Europe lowered their rate by a quarter
Oh,
percent.
that's right. They did.
Yeah, I thought it was going to happen a little bit quicker here. Again, politics aside, this is coming with the lower rates, and I think the biggest thing that's been holding us up is the Fed puts so much, on their core inflation into shelter, and shelter is one of those lagging things that you're averaging 12 months, and we've had, even though we're down to like 0.2% right now, which is a lot closer to where the Fed really wants their 2% target rate. We still have numbers over zero point 0.6 that are averaged into that shelter cost. So as we move through those numbers, that's going to make our core inflation go down, make them feel a bit more comfortable about lowering rates. And I think just looking at where we are now compared to where some of those lagging ones, again, the Fed's just looking at the rearview mirror. Unfortunately, windshield look up front every now and then. And if they would do that, I think, they may have even already made a cut, but they're trying not to make a mistake. And, we are not far out from, all the numbers are pointing towards it. So anyway, if you're gonna buy, my biggest fear is that you wait until rates drop. And I'm not saying that you want a high rate.
Yeah, see, I agree.
I have been floating people for a little while, and I'm getting in trouble from Cassie, my partner. Every day she sent him emails, lock, lock, lock. We're getting ready to close, and we've saved people a quarter, in rate, just on a guy that I locked yesterday because we're just at that point. But I've been just kind of a wait and see, and I knew these things were trending in the right direction. I'm not always right because I thought rates would be down by now. I'll never.
Yeah, we thought it
not
was
perfect
gonna
with
be
that.
way behind us.
Well, there was my really fast, coherent, concise thought, which I'm not capable of for sure, but
Well, it's a complicated
going the right way.
situation, which is why we're grateful that you come on the show and explain it to us.
Yeah, but if we wait for rates to be low, then you're in a bidding war. And I did the math on a 1% rate higher, and it was like 9.1 years is what it would take to pay back, buying 30, well, it was a pretty good average, like maybe 30,
Wow.
35,000 people were bidding over when they were just praying to God to even get into a house. So just, I hate the phrase, marry the house, date the rate or whatever. I don't like cliches like that because we can't promise rates will go down. But if you get in now, you can still refinance 6 months from now and get a lower rate, but then you've got your house and you're not in a bidding war going, promising to mow somebody's lawn for the next 5 years if you can just buy their house from them.
Well, and Southern Oregon has a certain desirability which equals appreciation. So even in an unfriendly economic time, people do well on the real estate in Southern Oregon, and it's shocking.
I know.
And I love that you're kind of planning that in there for them. Yes, you could just get them into a house right now and say, yeah, there's your mortgage and be done, but really
Yeah.
looking at where these rates are and how they could change and saying, let's be flexible with this. And I think a piece of that planning is how long are they going to be in this house?
Mm-hmm.
What are their long-term goals with it? Yeah, so that they can be deciding how long of a mortgage they're going to choose, or are they refinancing it 6 months, a year? But if they lose out on getting this house they want now, they can't go back and change that. They can change their interest rate someday.
That is true.
And I don't know if you've seen the inventory right now, but especially in Central Point, you can get a livable, move-in ready house for under $400,000. We just toured them. They're like $390. They may go down to $380, but they're 3-bedroom, 2-bath, 1990s, 2000, single story, 2-car garage for $390, but it's at close to 7% interest. And that's what's pushing the prices down.
Well, let's hope they get a little bit of a reprieve one way or the other, because I do, I guess we all sit across from these young people that haven't had the benefit of the appreciation when they sell a house. And, just talking to them and going through, and does it even make sense right now or does it not? And I think that's all part of the planning. And sooner you can get in front of Emma on that, better you're prepared when you go to buy a house. And sometimes just knowing is the comforting piece of the thing. Even if it's not right now, you're not, looking at the Zillow ad thinking, that at least you're working towards it at that point. So
you have a plan, and that's what's good about you and Emma is you're planners. You're helping people.
Well, it's not like you don't do your part finding them a good house for a good price. So.
Yeah, well, and I help them with the life plan too. I'm not a one and done kind of agent. I'm in there talking about wealth building, especially the young people. I mean, the older people, they understand a little bit more, but the young people, it's like you got to sit them down and say, you don't have kids. How about you buy your first duplex and live in it for 2 years? You do have kids. How about let's get you out of that rental? Yes, it's going to be smaller. Yes, it's going to be, not as fancy, but let's get you built. It's like you got to give them the life choices.
Cool.
And then you got to do what they say.
Just show them what's possible. Talk to them about what's possible, because they don't always know.
Yeah. And they don't always want to hear it, but they need to hear it. So speaking of which, how much do you think the Oregon rental laws play into our conversations, because we have a unique situation here in Oregon. We're the only rent control state in the union, and that's playing havoc on our rents.
Well, I mean, I'm
That's
dealing.
not political, that's matter of fact.
No, well, and you just have to stand up for the people you're standing up for. And so you're right, it's not political. You're doing what your job is, and that's to fight for homeowners. And there's nothing wrong with that. I'm in the middle of dealing with that myself. I've never had to evict anybody out of a house. I didn't raise their rent, up to where I could have with inflation where it is. It's almost like there's not rent control. If you went anywhere near what you're able to give, charge somebody right now because they tied it to inflation, it's way above what I would ever charge somebody extra for, their house the next year. But of course, if you're going to invest in here or you're going to invest in Tennessee and the laws are a whole lot more beneficial, you're probably going to go invest in Tennessee. I happen to like my rentals close to me so I can keep an eye on them.
Well,
Which is
that's
kind of depressing too sometimes because
fine.
might have a car or two extra parked out in front. But I mean, I still don't think it's a bad deal. I mean, we're in this judicial foreclosure state, and everybody thought, well, nobody could ever foreclose. Well, we're not really seeing foreclosures necessarily right now either, but
No, not in any of our 3 counties.
no, and I mean, there's always going to be good and bad, and no, it's not as attractive as it was before they did that. But I still think that you have that appreciation on the house. If you didn't have that investment property and you had 15-20% down, really on an investment, by the way, 25% is what you want to get a decent rate at all these days. But if you had,
and a decent payment.
yeah, that $400,000 house, if you had 100,000 sitting in a bank account or even, investing it someplace, that's great because that 100,000 is going to be appreciating for you. But if you turn that into the house, then you have, if you get past the tax credit, you do have some deductions that you can take, but you have 400,000 that is appreciating for you. And just the sooner you can get into that, the better. But that said, there's a lot of times where you just really want your money invested someplace that you're going to be able to get your hands on it a little sooner. And that's the part that Emma can break down for you.
Yeah, that long-term wealth building is really stellar, but it's not always possible. And that begs the question, what do you do in a life emergency?
Yeah. Well, and from a guy that invested most of his life in the hope it works out plan, just work someplace for a while, throw some money in a 401k, buy a house, and so I get these little assets, got some gold or whatever, and then just literally not that long ago, and I will sit down with you. I will, because I still haven't done that.
We could talking about other things.
I know.
I think the other piece of that is really understanding, like you said, not buying too much house in that. So that conversation, when you have financial advisors that can work closely with their mortgage officer and your real estate agent and be able to communicate well, then you can be talking about maybe they need to put a little less percentage down so they don't get themselves in a bad place.
So do you advise a percentage of cash
To have
Like-
on hand,
yeah, to have on hand?
really everyone should have 3 to 6 months of living expenses.
3 to 6 months. So that's pretty general.
Mhm.
Okay, well, we're talking to Emma Nelson, Oregon Pacific financial advisor, and Guy Giles, Mutual of Mortgage, and a grateful sponsor. We'll be right back after a quick words. We want to say thank you to John L. Scott, Ashland and Medford, and Arvar. Well, hey, Southern Oregon, welcome back to the Real Estate Show. I'm Alice Lima, broker at John L. Scott here in beautiful Southern Oregon. And just a reminder, this episode will repeat tomorrow at 8 a.m. on our new radio home, the ACE, 1300 AM and 1.79 FM. So you can catch Emma Nelson from Oregon Pacific Financial Advisors and Guy Giles from Mutual Mortgage and hear everything again, because there is a lot to what they have said this hour. So welcome back. Emma and Guy.
Well, thanks. I think Emma just touched on something. Well, not I think she did right before the break that I should probably talk about a little bit more often. You know, everybody's always been told 20% down, you know, and then you buy a house. Um, Again, I will always default to, you know, can you afford the house? That's really, you know, the bottom line. You know, does this make sense? But what we've done, and it's nothing I've done personally or my company, but mortgage insurance has come down a lot. So if you have a decent credit score and don't have 20% down, I've seen mortgage insurance as low as like $17 that I've given
Wow.
with a really good credit score, and you know, I mean, probably closer to 20, not probably, but closer to 20%. But even at 5% down, 3% mortgage insurance is not pretty. And that's why we usually look at FHA if you're down around 3.5% down. But that said, even getting into 5% down with a good credit score, your mortgage insurance is not cost prohibitive at this point. So
Mhm.
they've gotten pretty aggressive going against you know, the different mortgage insurance companies. Um, and anyway, it kind of makes sense
Well,
to
I find that
look at
sellers are resistant to the FHA programs, not so much the VA, and VA is stickier than the FHA, but
Well, and it depends. If you don't have Service Connect disability and you actually do have a down payment, a lot of times I will have a veteran do a conventional loan because why do you
uh-huh.
have to be shot or forget your ear protection in order to get a decent deal on the VA? I will never know. But they're standing firm, you know, and it could be over a 3% fee if it's not your first house on a veteran's loan. And it just, anyway, you want to give them the best. Again, it's kind of like sitting down with her and finding out your whole plan. Same thing
Hmm.
with this. You know, you don't just want to say, "Hey, I'm a veteran. I'm going to automatically do a VA loan." There are variables to that too, but it is a really good loan
Hmm.
in the right circumstance. It is the best loan out there in the right circumstance.
Yeah, well, and God bless those service people. They deserve that. They
Yeah.
absolutely deserve that. They earned it. So Emma, um, in the last few minutes we have, what about veterans? Do you have anything special that you do for them planning wise?
There's a lot of planning that we can do around their benefits, what they're getting, how much their spouse is going to get when they pass, if they predecease them, how much their social security benefits may be, what their spouse's social security benefit is because of that, where some medical benefits are going to come from, how they cover those if they do pass away earlier. So we can do a lot of planning around that.
So what about long-term disability? Is that a thing?
You mean specifically for veterans or just as
Uh,
a to clients?
well, I was actually asking for veterans, but it's good to answer for both.
Yes. Yeah, there's a lot of planning we can do that, especially as clients are working through getting approved, you know, and their percentage of disability. There's a big difference between having just a small percentage and qualifying 100% disability and the benefits you receive. So that really changes in our financial plan, both in their income currently and then how it protects their spouse after they pass.
Okay. So, are you allowed to work when you're on disability?
It depends on the type of disability
Okay.
and their age. There's a lot of factors that go into it. And so long-term disability in general, that's something that I can have conversations with clients with. I'm insurance licensed as well, so we can talk about long-term care
Oh,
insurance, disability insurance if you are 40 and working in your job and providing for your whole family and something happened to you, do you have disability insurance? So we can help with that as well.
wow, you're one-stop shopping.
Mhm. Yeah, we have a team of 6 local advisors. Half of us are women, and we sit down. We each kind of have our specialty. So it's not an area that I've specifically worked in, or an insurance question that I don't know the answer to. I'll work in partnership with one of the other advisors in our office that has over 15 years of insurance experience. One of
Hmm.
our other advisors works specifically with business owners as they transition their business and sell it. So that's a big part of.
Oh, we didn't even talk about business owners.
We'll get to them next time, and they're commercial property. So we can have that conversation and we'll partner to work on them. I work on their financial plan, and the other advisor will help with their business strategy questions.
Wow. Wow. Is there
Or a
special?
specialist as well.
Yeah. Is there special insurance for business owners?
There's all types of insurance. Yeah, a buy-sell insurance is a very important one for business owners, so that if they pass away, in small businesses, if they pass away, their spouse can get paid, someone can purchase the business and they can walk away with the cash because oftentimes they wouldn't know what to do with the business.
Oh, gotcha. Because it's the other person's baby.
Yeah, and even if
Yeah.
you're involved in it, there is a loss there that needs to be covered, so we can definitely help with that.
Yeah. Well, that can be catastrophic.
Yes.
Well,
Yeah,
what?
it's really when we're working with clients the most is those transition times, whether they're the exciting ones, I'm having a baby, I want to start a 529 plan, or I'm buying a house, how do I do that? I'm saving to buy this house, or in the difficult transition times of I've lost a spouse, going through divorce. That's one of the specialties that I work in is helping clients transition out of divorce. What do they do with retirement plans? What do they do with half the finances and maybe they're managing them on their own now? And
Mhm.
then, death of a spouse, leaving your job either mid-career or in retirement.
See, this is where my opinion is you should have this all documented, whether you're married or not, ahead of time.
All of your finances?
Yep.
Yes. Well, and
Yeah.
just having that clear picture and having both spouses involved, because the hardest part is when a spouse comes in and the other one managed the money and they don't know what they even have.
Yeah. Yeah. And then all of a sudden the phone starts ringing and
And I'm a little freaked out about a word I'd never heard before just now, predeceased. And now I'm waiting for my wife to come in and say, do that again and you're going to predecease me.
A good use for it there.
Yeah.
well, I can see we're going to have a lively conversation next time. That's pretty funny.
Whoa. Shoot, how long do we have left?
2 minutes.
All right. Well, anyway, so if your perfect person walks in the door, Emma, it's like just obviously you deal with everybody from everything, but what's your favorite kind of people to help? Or you think you can do the most good for, I
That I
guess?
can do the most good for. Really over the last couple years, and after my divorce, the divorcees is where I really find I can make the most impact. I lived it, it's awful, and to be able to understand that and be a support through it, provide the education they need around the finances, their investment accounts, what they're doing, how they're maybe splitting the house, referring that over to talk to a mortgage person if they now need to refinance and take someone's name off of it, and helping them kind of just reestablish and create a financial plan on their own going forward.
Yeah, that's a big deal. We
And the
had,
other thing is, I mean, if the one person can qualify without it, we might be able to look at doing like, a quick claim deed where, the whoever the person is or the investor that has that loan, if they'd be willing to maybe release the liability for that one without having the cost of a whole refinance if the rates are higher than they were before. So that's a good conversation to actually have rather than, just, hey, we're gonna have to refinance. So we
Yeah.
could talk to them about that too.
well, and that's a complicated situation where if one person isn't strong enough, what do you do? So maybe we'll have you back to talk about businesses and divorces.
Absolutely, and I'm sure you can help in that too, that kind of conversation of what they're doing with their house. I know as I went through it, I needed to get it appraised. I needed to have an idea.
Emma, how do people get a hold of you?
They can find us online. It's opfa.com. That's the easiest way. We're right here in Southern Oregon. We have an office downtown Medford and then one in Grants Pass. You can call us. It's 541-772-1116. But find us online's the easiest. My calendar link's on there.
Oh, great. That is so slick. That is so slick. So Guy, how do people get a hold of you if they want to talk about mortgages?
Well, same phone numbers, the cell phone's the best, 541-944-6987.
We'll have you back on again.
Great to be here. Thank you so much. It was great to talk with you today. I look forward to it.
Thanks.
Thank you, Guy. We always appreciate your financial updates every month. Just a reminder, this episode is going to replay tomorrow at 8 a.m. Thank you to Guy Giles, Mutual Mortgage, John L. Scott, Ashland, and Medford, and our local Rogue Valley Association of Realtors for bringing this show every week. Have a beautiful Southern Oregon weekend. Bye now. there's chaos and you're grieving. So anyway, would
Yeah.
you come back on the show and let's talk about um, the planning of business?
Yeah, absolutely. I think we can have a really good conversation about that. I enjoy it.
Yeah, we could take up the whole hour.